JBlog, May 30th, 2010. Starting out by looking at the New York Composite Exchange as often. Of course, we've had another week of ups and downs. Nothing much happened here. There was a potential for a more substantial drop here, but that was erased. This was basically the dangerous day. And even though the bears tried to push their point, bulls fought right back. There was no news on this day, so it was basically a line drawn in the sand that the bulls would not let the market go below, and they managed to win that battle for that day. Longer term, this is a 2-year S&P 500 chart, and you can see what we were just looking at over here. This is basically a double bottom. And we'll see I drew all of these trend lines in here. Every single one of them has been broken. So this is basically this is ground zero, this is D-Day. This is basically the line that needs to be defended. Otherwise we're going into a substantial bear market again, which I believe we will, but not everybody's on that page. The big news, of course, is that Finch has downgraded Spain. Spain has lost its AAA rating, and that weighs heavily on the market. I find that the words surprising and unexpected show up a lot. I don't find any of this surprising or unexpected. I find it perfectly natural. Actually, I believe these rating agencies would have done the world a favor if they've taken AAA ratings away a long time ago. They should also take them away from Japan, as well as the UK and diverse other countries in Europe. And eventually the US will lose its AAA rating as well. Initially that was supposed to be in 2018. That has actually been scaled back to 2014 now, and let's see what the current administration will do to hurry that date along even faster. They're certainly doing a great deal of work to meet or exceed those expectations. What I'm happy about is that the retail investor is not buying into this rally. Retail investor is very cautious, hasn't bought into this rally. Here's an article about that. They are staying in cash, and they're not paying any attention to Warren Buffett's advice, which is, I believe, a smart thing. So I believe the rally that has happened is basically trading houses selling stocks to each other using high um, computerized trading amongst themselves, and this is what scares them because they've got no buyers out there. So all they can do is hold it here or have it collapse. There is no fundamental reason why the stock market should be this high at this point. They've driven it up this high. They're sitting on a whole bunch of paper that is basically worthless, and they're not finding buyers for it. I am happy about that. Now, I don't know if I showed this chart last time, but this is a chart of how many percentage GDP financial corporations actually add, and it is quite amazing. We've got in France, we've got 34% of GDP being added by financial corporations, which basically do nothing. They don't add any productivity. There's no value there. It's nothing being made. This is just money changing hands. To count this as GDP is, in a way, an insult to working people. Um, so it is substantial. Once you take this away, GDPs will be hit severely. Other things I've come across are, well, of course, we have the Spain story that has hit Asia. Um, there is a very good YouTube video. Just look for the word melt up, inflation US. Very up to date. I mean, it's all old information basically rehashed, but the numbers are all up to date. It was just done in May, So there's some good stuff in here, quite worth spending the 54 minutes and watching it to see where we are now and where we're headed. Bloomberg's, of course, the TED spread is up, is staying up, even though the VIX has once again collapsed. But the banks and the interbank lending is certainly again not buying this. So people are not buying insurance, yet banks are not lending to each other for cheap, and that's usually a sign for problems to come our way. Um, Another thing that has started is the hurricane season has basically started. As of right now, there is no hurricanes in the Atlantic, but that will start um, relatively soon now, and then go into October. So that could affect oil as well. Of course, the BP disaster could affect the price of oil as well. And if oil goes up, that will suck further financing out of the economy. Let's see, what other things did I find? Oh, of course, we are still at a PE ratio of almost 20 on the S&P 500. Certainly, anybody who tells you that this market is undervalued and that it is cheap is not doing their homework. And if it wasn't for this last 10-year um, Greenspan bubble, then that the averages, the mean, and the medium would be a lot lower than it is. The S&P 500 is paying an average of 2% interest. All I can say is why bother being in it for 2%, for 2% dividend equivalent interest. There's really no point being there. And that's basically why investors are not in there, because bonds and other investment are simply offering greater value. Now, once inflation hits, which it will eventually, that will probably change, and we're going to see more money flow into the stock market as well as into precious metals and real estate, but I don't quite see that happening quite yet. Um, what else do we have? So this is the S&P 500 chart that we were looking at. Um, and let's just drop down to a 6-month level for some detail here. So we had this second run up, which fooled a lot of people into thinking that we had another bull rally on our hands. And again, sell in May and go away has been the good advice to follow, because pretty well starting in May, this rally, this last leg that knocked out lots of the bears, did collapse and collapsed quite dramatically. Now, what I find funny is everybody screaming about how the end of the world is coming. Um, Look at this run up here. You've got a 70% run up. Nobody was complaining about this run up, and then we've got a 10% pull down, and that is the end of the world. I think we're going to see a lot more to the downside here. We could potentially even exceed the lows from March. That would, of course, be disastrous. It could happen. Um, but then we're not really operating in a free market economy anymore, so it really is hard to say exactly where this is going to end. I continue staying bearish, and because this experiment has been tried many times, it always ended in tears. I don't see how it's going to be different this time. But that's about all I have for this week. That's what I'm watching. I continue being short diverse stocks. Um, Nothing really has changed so much in my positions. I'm just biding my time at this point and watching the noise go on a daily basis. So good luck next week. I hope you're doing well, make lots of money, and all the best. Bye.